Welcome aboard, Air Transport Statistics Channel, broadcasting from the Netherlands. In this channel, you can find air transport related data, and I hope it can assist you with your investment in the aviation industry, especially from the perspective of fundamental analysis. In the series of videos, I am going to explain the top 10 passenger airlines by revenue. Today, I am going to analyze the number 8, China Southern Airlines from China. As you can see, China Southern is ranked number 8 among the top 10 passenger airlines. The airline is the biggest Chinese airlines. China Southern Airlines, together with China Eastern Airlines and Air China, are called the Chinese Big Three airlines. Firstly, we will see the general description of the China Southern Airlines Group. The airline was founded in 1988 in China, and China Southern Airlines has established in 1988 under the Civil Aviation Administration of China Guangzhou Regional Administration. In 1991, China Southern commenced the first operation from Guangzhou region, which located in the southern China area, which is well known for the Pearl River Delta Economic Zone. Its headquarters is located in Guangzhou. The stock is dealt with at Shanghai Stock Exchange, Hong Kong Stock Exchange, and New York Exchange markets. It has two major hub airports, Guangzhou International Airport and Beijing Daxing International Airport. From Guangzhou, the airline connects massive destinations including long-haul routes. The newly opened Beijing Daxing International Airport became its second international hub, though it is not located in the China Southern area. Currently, the airline no longer belongs to any airline alliance. It used to be a member of Skyteam, but it seceded from the alliance in 2018. It has totally 224 destinations on both international and domestic routes, only for China Southern Airlines. The group has 103,876 employees. The subsidiary airlines are composed of Xiamen Air, Sichuan Airlines, Chongqing Airlines, Guizhou Airlines, Zhuhai Airlines. Especially, Xiamen Air and Sichuan Airlines operate several international flights including long-haul routes from Xiamen and Sichuan. Next, destination information. This information is provided from flightconnections.com. As the name suggests, China Southern Airlines mainly operates from the southern China region. It has a lot of long-haul international flights. Noteworthily, it has a lot of routes to Australia and some unique destinations to Africa and the Middle East. This is the business portfolio of the airline. The airline has a high concentration in air transportation sector with 96%. Cargo business amounts to 6.3% within the air transport sector. Here is basic financial information as of December 31st, 2019. Therefore, before the corona pandemic, the revenue amount is $22.3 billion. Profit is $0.4 billion and profit ratio is 1.7%, which is the lowest among the top 10. Asset is $36 billion, which is relatively high with its revenue amount. Equity ratio is 20.9%, which is number 7 among the top 10 airlines. Market capitalization is $12.2 billion and ranked number 4 as of 6th of December. The number of yearly passengers is 151 million people. Cargo ratio is 6.5%, which is relatively high compared to others. Therefore, the cargo revenue can be a precious revenue for it. The domestic share is 71%, which is higher than China Eastern. It is number 3, and this is obviously a good sign because, during this pandemic, international border is strictly controlled, especially the Chinese government has imposed pretty strict border control. So, domestic flights are a lucrative sector. Load factor is 70.3%, which is the worst among the top 10 revenue airlines. This explains why the profit rate is so low. This shows the revenue and profit of China Southern. The blue revenue is on the left axis, in unit of million $, and the orange line shows the net profit rate is right side in percent. It is noticeable that the revenue amount keeps growing, as the Chinese economy also grows almost 10% annually. On the other hand, the profit rate is fairly stagnated. Presumably, This is due to the low load factor rate as we have seen on the previous page. Moreover, recent long-haul expansions by other Chinese airlines impacts their profitability a lot. This results in lower load factor and lower airfare. This is a half-year financial result since 2019 March. We can see that the revenue and profit plummeted in March 2020 result due to the corona pandemic. However, it turned to be surplus in September 2020. This is largely because of the steep recovery of the domestic market in China. And luckily, China Southern has a large share of domestic flights, accounting for 70%. Simply Flying article reports that the third quarter profit of China Southern amid rebounding market. It analyzes that the recovery of the domestic market is the biggest contributors for this revival, while international market is still sluggish. Next, fleet information. China Southern has 622 aircraft in total. Please note that the fleet of other subsidiary airlines is excluded. It is noteworthy that the airline has less portion of large and middle-size aircraft, unlike other major Asian network carriers. This includes 5 A380. On the contrary, small-size aircraft surprisingly accounts for 82%. This demonstrates how the airline relies on the domestic market. The operation cost of large aircraft is higher, so this is a good result during this era. With smaller aircraft, airlines can operate flights with less demand. Unlike China Eastern, the airline also has high ratio of cargo aircraft. Meanwhile, the ratio of large aircraft is low, which means the airline has few aircraft to carry cargo with passenger aircraft. Large passenger aircraft can carry many cargo in their belly section. On the other hand, cargo capacity is limited for narrow-body aircraft. The average age of aircraft is 7.5 years, which is quite young. This means that the airline can minimize the operation cost, but at the same time, it is difficult to retire these aircraft. However, in the case of China Southern, the domestic demand recovers significantly, therefore presumably there is no need to reduce their fleet size. Currently, they even operate A380 aircraft on domestic flights. Look at the corona situation in China. I am going to look into this because it is no doubt that COVID-19 affects the air travel demand enormously. Left side shows the number of cases, and the right exhibits the death toll in the country. Surprisingly, China currently has very few cases of COVID-19 at this moment, and no death. The highest numbers were recorded in February with 6,905 cases and 142 daily deaths. This strange surge of the death tolls is the data correction made afterward. I know many people are suspicious about the data from Chinese government. Actually, it was revealed that they falsely minimized the number of cases and death tolls at the first stage. However, I personally think that currently China does not manipulate their figure anymore. I am not a pro-China person, and rather I am usually quite critical about their misconduct. But to be fair, there is no point in cheating the figure at this moment, in a time that other countries are also suffering from the virus. Anyway, let's assume that this figure is scientifically correct. With strict border control and other methods, the country is pretty successful in containing the coronavirus. Even domestic travel beyond their province requires a certificate to prove negative. This is the comparison of flight schedule change year over year published by OAG. It illustrates how much extent do flights come back to the air compared with the same month in 2019. The lower the number, the more flights are cancelled. I would like to see this in order to see the impact of the pandemic on each country. The blue circled one shows the data of the mainland China. China and Hong Kong demonstrated the first enormous drop of air travel in February in the world, as the virus spread from Wuhan, which locates in the central part of inland China. However, as a result of the few corona cases in recent days, the travel demand is largely coming back to the air. Actually, China shows the highest recovery rate. Especially in October, the figure amazingly returned to almost the same amount of the last year. Look at this statistical data. The right red squared part shows the comparison of international markets of China between 2019 November and 2020 November. You can see that the international market plummeted extensively compared with the last year. The Chinese government has imposed strict border control on entering China, so the drop is very large. They require PCR test when passengers arrive at Chinese airports and 2 weeks of quarantine, plus the number of flights is strictly controlled. Nowadays, China relaxes the restriction against the countries which has few corona cases like South Korea, Japan, or Singapore, but it still remains rigid. This results in a dramatic decrease in international market. It is even smaller than South Korea as of November, although usually, Chinese international market is larger than Korea. Meanwhile, the left side blue box indicates the comparison of domestic market. Again, surprisingly, the domestic flight recovers completely because of the low corona case in the country. Rather, it exceeds the previous year's amount. It is reported that now many Chinese citizens travel domestically, instead of going out of the country. This is partly why their economy recovers quickly. Thanks to their vast land, domestic market is originally very large, next to the United States. Some international flight aircraft are now used in domestic flights accordingly. This is the stock chart of China Southern since 2003 at Shanghai Stock Exchange. The unit is Chinese yuan. The current price as of January 7, 2020, is 5.75. The lowest price is 1.56 scored in 2005. This is 27% amount of the current price. The highest price is 18.63 marked in 2007. This is almost 3.2 times higher than the recent figure. This is the stock price chart for the last 1 year. China Southern in blue color has dropped 17.15% since last year. Firstly, look at the upper left chart. This is the comparison of China Southern and American Airlines. Compared with American Airlines in red, the degree of the drop is less. Presumably, this is because China Southern has enjoyed the steep recovery of the Chinese domestic market. Secondly, look at the bottom right chart. This is the comparison with all Nippon Airways in red. Again, China Southern's degree of the drop is less than all Nippon. Focusing on China Southern Airlines, recently the price is decreasing trend to some extent. Though the corona situation in China is almost contained, it is assumed that the price is affected by other countries. China is carrying on inoculation of the vaccine these days, and will have the Lunar New Year's Day on February the 12th, so I assume that the price will increase sooner or later. This is the end of China Southern Airline analysis. Please remind that your investment shall be done with your responsibility and careful decision. In the next video, I am going to see the case of Southwest Airlines in the United States. Thank you for your attention, and I would like to see you again.